Thank you for joining me. I'm Alex, and I would like to cover CarMax today, and I'll probably cover car-related businesses for the rest of the week because there's a lot of them that I'd like to cover, and because I would kind of like to cover their outlook and their risk factors, especially with the future of the car sector as a whole. So today we start with CarMax, and they do car dealerships, which is usually fairly low budget and all brands. Their current price is $92.71, which gives them a market cap of $15 billion, and that dropped 6% on Friday. Dividend is 0, probably going to stay that way. Revenue is $18.1 billion, which is up ever so slightly. Earnings $842 million, which is up significantly, and that gives them a PE of currently just under 18. Total assets $18.7 billion, total liabilities $15.3 billion, and total stockholders' equity $3.3 billion, up from $3.3 billion. So fairly consistent, much more than I would have thought. The numbers seem to be going up, which I guess is kind of to be expected with the economy being in the shape that it's in right now. Obviously, we're still recovering from the big recession, and people finally getting to a place where they can afford a better car. And there's still a lot of people that are underemployed but no longer unemployed that need a car, and the budget option obviously falls to CarMax in a lot of cases. So business is going quite well, and so obviously there aren't really all that much risk factors for CarMax, although I've seen a recent ad that Walmart is doing something with cars now, which is weird. But beyond that, I don't think there's a whole lot of risk factors. They kind of have their own little niche, which they're dominating. In their niche, there's several other players, but there's no major threats coming there. So as far as risk factors goes, pretty much everything stays the same. Continuous growth in revenue, continuous growth in earnings is pretty good. PE is pretty decent. The balance sheet looks pretty good. It's not ideal, but it looks pretty good. So to sum that all up, obviously, if you're looking for dividends, you're just out. If you're looking for growth, you're probably out as well. As a value investor, I think that from the fundamentals, this company looks pretty solid. The PE is decent. The balance sheet is decent. The growth is reasonable. It's low, but it's there. So I think that for a value investor, this might be a stock worth looking into and kind of digging into where they expect the growth to keep coming from and how well they would fare in the next recession. But overall, I would think that this is a pretty solid company, and it's worth looking into investing in this if you're a value investor. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.